You remember this guy, David Hefty, CEO of Hefty Wealth Partners, made an extremely bearish call right here on Squawk on the Street back in May.
We do believe it's going to go into a complete free fall, much like we saw in oil back in 2008, that could push the Dow as low as 5,000 or even lower by the end of this year.
Oops. To balance him out, we have a bull, Rob Russell, president of Russell & Company. Then again, maybe the balance is Rob will be right. David, Dow 5,000? Doesn't look that way.
Well, you got to keep in mind, back in May, as the European Union was waiting for Germany to see if Germany was going to go against the very basis of how the European Union was formed. They're not allowed to bail each other out.
Right.
Germany caved. They did a $1 trillion bailout in Europe. The market recovered. Since then, we're starting to get quantitative easing. The Fed is saying that they're going to add maybe another $500 billion to a full $1 trillion into the system by printing more money. That's why we're seeing inflation-sensitive assets rise, and we do believe in the near term they're going to continue to rise. The issue is you have this herd mentality with all the bulls saying don't fight the Fed. There's times, like right now, where we say don't fight the herd. The problem is the herd has it completely wrong. They have completely misinterpreted the actions of the Fed. The biggest issue in this country is the $42 trillion of private debt that is deleveraging. When you look at money velocity, it's dropping like a rock. The Fed is simply trying to put their finger in the hole and plug it. And it's going to work for a little while, but even if you delever half of that over the next 5 to 10 years, that's $21 trillion. And the Fed is not going to print $21 trillion.
Are you saying you weren't wrong, you were just really, really, really early?
Absolutely, I'm not wrong. The issue here is when you have government intervention into these markets, it does continue to change things. You know, back in July, we went fully in. We're fully invested in inflation-sensitive assets right now. However, again, it's going to shift. It's going to shift fast and hard.
Hold it a second. You told us in May the Dow was going to 5,000 and you were fully invested? This is a little hard to believe.
In July, we went 60% in, and by August, we were fully back invested, but in inflation-sensitive assets.
I can't hear, David.
The bulls say don't fight the Fed. We say don't fight the herd.
Okay. Let's let Rob Russell, interject. Go ahead.
Yeah. So I think, you know, if you've lived through the past 3 years, I think you'd be foolish not to consider another market downturn. But, you know, my job for my clients that are risk-averse is not to try to time the market. It's actually to look for a strategy, and part of that strategy is look for growth opportunities. And where we see those growth opportunities are overseas. And I think one of the ways to play that right now are the companies that actually fuel that growth overseas in emerging markets. And a lot of those companies are multinationals here in the U.S.
Well, yeah, I mean, for the S&P, 50% or more of their profits on average come from overseas. And a weak dollar, I would imagine, would only make those profits stronger.
Yeah, exactly. As the dollar falls, the exporters become more and more attractive. It's cheaper for those emerging markets to buy their goods. And they're building their infrastructure in emerging markets, whether it's Indonesia, places like that, or China. And what do they need? They need our machinery to do it, and our consumer staples.
Yeah, our drills are the one that got the Chilean miners out.
There you go.
Pretty amazing. It was. Yeah. We had the company on yesterday, so they've been getting deluged with requests to buy more.
What part of the market's going to treat us best?
Well, again, I think the sectors to be in for growth opportunities, of course, are the consumer staples, you know, the infrastructure machinery types that are multinational, that drive a lot of the revenues overseas, and even healthcare and tech.
Are you allowed to mention any names?
No.
Then we'll leave it at that. David, Rob, thank you both very much.
Thank you.
Appreciate it.